Rob, one of the things that's been a huge theme at Deep Knowledge Investing for about a year and a half has been a bifurcation of the economy. And we've talked a lot about how, one week we see data that indicates one thing, the next week we see data that contradicts it. So this week, we got a lot of really negative data on the economy. The Purchasing Managers Index came in um, below 50 again. So anything below 50 indicates contraction. And it's been below 50, indicating contraction for 17 out of the past 18 months. That is not the sign of a strong economy. In addition, consumer confidence, which does matter, was 97. Is that good? Is that bad? It was way short of the number that was expected, which is 104, right? A approximately 7% miss. That is a big, big miss. In addition to that, we talked earlier in this episode, Rob, about how Friday's employment data was weak. The reason we've stopped writing on it is because that data is so manipulated that it's just proven to be unreliable. But that data came in weak. And so we have all these indications that the economy is weakening. And yet, here's the other side of it. I got a great invitation from Tracy Schuchart at Chigirl, CHIGRL on Twitter, to do her Mic Drop Market show ahead of the Federal Reserve press conference. And this was on Wednesday, and there's some really smart panelists on there. It was a great discussion and great debate. And a lot of them were saying, hey, listen, the economy's in great shape. We've got GDP growth around 2%, and unemployment is still below 4%. And even though the jobs information has come in a little bit weak, but in prior months it had been really strong. And that all of that's true. There are lots of jobs out there at the moment. If you want to be working, the prospects of going to get a job are actually pretty good. And so they're pointing to government data that actually shows the economy is in good shape. And these are smart people whose opinions are worth taking seriously. So we have this incredible bifurcation of opinions, right? We're getting some people saying the data looks great. And then this week we got a bunch of data saying that things weren't so good.
Yeah, I like what you used in the takeaway, Gary, of a bifurcated economy, right? Because we've talked about this a lot with job reporting and a lot of that coming in numbers that people taking up two jobs, right? Part-time job or full-time job as well as on the GDP side, right? I was like talking about digging holes and then paying people to refill them. So, and then you've got, very bright and intelligent people on both sides of the aisle having the conversation as well. Hey, painting this as a good thing, painting this as a bad thing. Is it a bifurcated economy? Is there both sides of the argument that can be true at once?
I think that's the case. And I think that's what's going on here. This is one of those weird situations where you really can see a possibility that everybody is right, which I know sounds crazy, but let's go through it, Rob. The people on Tracy's show who were saying the economy is in great shape are looking at aggregate data. In fairness to them, when you look at that data, we're looking at an economy that is in really good shape, right? We have consistent economic growth. We have low unemployment. We have tons of jobs available. Wages are up. Consumer spending is high. And so they're looking at that saying, we don't have multiple economies. We have one economy and numbers look pretty good. And everything that they said is true. My take on it is we do have a bifurcated economy. I think the reason why the numbers that these people are talking about are good is because of excessive government spending. And Rob, you just brought up the key point, which is all government spending, whether it creates value or not, adds to GDP. And so right now, Congress is overspending by a couple $1 trillion a year. That is an incredible amount of stimulus for a country that supposedly is not in recession right now, right? And we still have an inflation problem, and they are just spraying more and more stimulus into the economy and financing it with debt. This is not what you should be doing if the economy is in good shape. And so one of the things we've talked about a lot in recent months is that almost all of the new jobs are either in government or in healthcare, which is largely funded by the government. The government is creating its own economic statistics by just printing dollars and spraying them out and hiring people. But these aren't things that create value. And I'm not negative on healthcare. Obviously, healthcare creates a huge amount of value, but that's not the whole economy here. In my opinion, government spending is pushing out the private sector, and all of the new job growth has been in part-time jobs. And so what that means is that more people aren't working. The same number of people are working more jobs. So the aggregate numbers show a strong economy. But I think when we go down to the individual level, there are a lot of people suffering from having difficulty making ends meet. Inflation is a huge problem. Wage growth has been real, but not enough to offset inflation. Credit usage is up. And government spending is pushing out private investment and pushing out the private economy. So I do think this is a tale of two economies here, where the aggregate numbers look good because the government has their thumb on the scale in a very deliberate, heavy way. And individuals, in the private economy may be facing much more difficult circumstances. And so that's the part that I'm sensitive to. I'm not a big fan of excessive government spending. I would rather individuals be making their own choices and have the opportunity to earn a good living themselves. So I think that's what's happening there. And I think we have just a huge discrepancy between the government economy and the private economy. I think that's what's happening.
Great breakdown there, Gary. I know we've been talking about that a lot, and we'll continue to monitor those things moving forward.